This is David with the Enzo Trading System, and today I would like to do a quick update of the current status and also refresh a little bit the issues related to drawdowns, maximum drawdowns, and trading with leverage. We talked about this in previous videos. When signing up, there is a video that is a required watch that kind of explains this, but I think it's a good time to talk about it again, perhaps from a slightly different perspective, one that is more focused on leverage trading, which it's our main focus right now. So first, the market. I don't personally do market analysis. I think I don't think it's really important, but in general, I think just to give an idea why things are happening, how the trading models responding to it, and why some things are more intuitive than others. So around May, the Bitcoin was about 60K. That was the first week of May. Of course, we don't trade only Bitcoin right now, but we're using it as a reference, especially since recently diversification hasn't really been diversified so much. So Bitcoin is driving pretty much all the other crypto markets. So we may as well just look at Bitcoin for now. So the Bitcoin was at 60K, and then it touched 30K, and then it went up 40, and now it's playing between 30 and 40. So I think there was a lot of positive feedback when it first went down from 60K, because we managed to avoid the brunt of the loss. This is especially true with leverage trading. As a reminder, so the market is dropped by 50%. So if you're, if by some chance one is doing leverage trading without risk management, without proper stop loss, that would mean that perhaps with a 3x by 40K, it would have reached the total liquidation. That's definitely something that we didn't reach. So liquidation means losing all the funds. So of course, that's a reminder why leverage trading should always be done with proper risk management. So went to around 30K, and then we racked some losses, but this is as usual when the market is uncertain, when there is no trend, and things start moving up and down, and without a clear trend, there is really no easy way to make some profit. One could try to do some scalping, but it's generally just not worth it. And that's what happened. It's all within parameters. So I would like to go back. I would like to go to actually the usual year 2020 as a reference, because it's full year of trading, and it's a good reference to see what's to be expected for the future, and what's happening in the present. It's what happened in the past. So year 2020, let's see, we finished at 120%, 26% to the maximum drawdown. We were trading without leverage. Of course, we can simulate trading with leverage today, and that's what we're gonna do in a little bit. And the first thing to keep in mind is the profit curve. We started at, with a certain amount, and we ended up at plus 120%. So that's always where you want to keep in mind. Always keep in mind the end goal. 6 month minimum, 1 year generally. Less than that, it doesn't have a statistical significance. I understand a lot of people that just came in like a month ago and they feel like the world is falling. But a few months of drawdown is perfectly normal. And so let's actually go here, the simulation that will show us, will allow us to simulate with leverage what happened last year and what's happening this year. Because we want, the base case right now is with leverage at least 3x. So here we'll change to perpetual futures, set the leverage to 3x, Some people are using 4x, some 5x. 3x is the basis. I'm actually going to increase the commission rate from 0.4% to 0.6 just because I want to make things a little bit worse. I want to give a little bit of a worse picture. So with 3x last year, considering excessive trading fees, we would have made 600%. But the maximum drawdown, we would have gone from 26% to pretty much 60%. So what is 60%? It's nothing to sneeze at. It's pretty drastic, but the important thing is the return over the maximum drawdown. So the more you want to earn, the more you have to risk, and by risk I mean the fluctuations of the fund. You want to make 600%, you have to be able to afford 60% maximum drawdown. If you feel like you don't want to have this level of drawdown, then there is always the option not to use leverage. Then you go back to 25% maximum drawdown. If this is too much, you invest half of the money, and then it's only 12%. So pick how much you want to earn and how much you ready to risk. So back to 3x leverage. I would like to zoom in, for example, at February and March last year. So I want to really make it real in a way. I understand that looking at a month of performance like this, it doesn't really give the proper feeling that one has when he's looking at the market day by day and is seeing the fund going down and down and down. But it's what happens. It's what you have to go through. And so I just took quick calculations to make sure. So by mid-February last year, we were up 46%. And then by mid-March, with the Corona drop and all that, we were minus 37%. So this means, let's see if I got, do I have a calculator? Where's my, there we go. This means the top right at the bottom, there should be also a magnified version of the calculator. So we were, lowest was minus 37%. So to calculate the percentage of difference, we'll switch to the net asset value, which is basically percentage plus 1. So it would be 1 minus 0.37, so minus 37%, divided 46% profit, 1 plus 40.46. That would be 43% from this point at this point, which means minus 1 plus 100 by 100 minus 56%. So this was a minus, let's say 57% drop, which is close to the maximum drawdown for the year. It does happen, and this was only leverage 3x. If you're leverage 4x, your maximum drawdown becomes 70. If some people have 5x, it becomes 80. But then you end up perhaps with 1,000% profit. So the higher is your leverage, the higher is going to be eventually your profit, but you also are going to suffer more fluctuations, and it means that you may at some point lose 5x, which I generally don't suggest. You may lose 80% of what you have, but then eventually, you make it back. But you have to be able to deal with the fact that you're going to, again, normally suggest 3x, and so generally one shouldn't suffer more than 60% temporary loss, but could be a bit more, could be a bit less. I think we're already close to that this year for 3x. And yeah, this happened. It happened in February and March. It happened in summer. what is it, June to 1.5 months. This was probably deeper drawdown. At this point, we were at 370%, and then it touched 200%. I think this is about another 60% drawdown at 3x. But yeah, the problem is you just have to give it some time. And another problem, unfortunately, people usually they get excited when the market has been in the news for a few weeks, a couple of months, and so they jump in. I mean, as far as I'm concerned, it's not a problem. You can come in at any time. The earlier, the better, because you never know. It's pointless to try to time the market, but overall, people usually, when they get really excited about the market, they come in, and that's when there's going to be a retracement. In the long term, it doesn't really matter, but in the short term, of course, this is scary, So if you don't want to get scared, ideally, you would have to come into the market when the hype is not so high, when not necessarily it's dropped so much, but it's not moving that much. A new customer ideally would have to come at this point. The problem is that at this point, during these periods, people are not excited about it. They don't read the news about it. They don't think about it. So when it peaks, they come in. So, it's perfectly understandable, but it's a psychological thing. Market goes well, people are excited, they come in, and then it goes bad, and then of course it only goes bad within a month, and so one gets really scared. But a month is nothing. You have to go through multiple months, perhaps 3-4 months of being in the negative, and eventually the big win is gonna come. That's how it works. So don't look at it daily, don't look at it weekly, and just be patient. The system is, we've seen this in previous years. It's by design like this. If you don't want to take as much risk, don't use leverage. Of course, never, don't tweak leverage like up and down. And here comes, the other big thing. This is not for the pro user, it's for the free users mostly. And that's actually one reason why we stopped accepting new users, because with the free license, people, they run their own client, and they feel kind of, I guess they have a more direct approach. They have the ability to tweak things. And as I said many times, that's your own downfall. I'm seeing people, they're unplugging the client right now, or they went during, where do we have, during this period, they started selling by hand, and then, because it's very frustrating to see like a month or two of loss or apparent inability to catch those profits, because they will see like, oh, it went up, I could have made this money and all that. But I just don't know how to explain it. It's just you can't do better. You cannot do better. It's very unlikely you're gonna get yourself in trouble if you start tweaking with this. First of all, we don't support manual trades with the clients. As of right now, we're in some positive positions, and I think some people are not in because they mess with the trading client, and now they're not able to open new positions. And that's just to make 1%. Just because you can't wait 2 weeks, you're frustrated, and then you're just gonna get yourself in trouble. You're gonna lose the big wins. I just don't know how to say it. And frankly, at some point we're gonna drop some of the users because we just don't. If users that are not able to take to leave the system as is and let the system do the profit, they're gonna get frustrated, and we're gonna get a bad publicity because they're gonna say, oh, we didn't make any money. If it's your own fault, you should probably use another system, frankly. And as a reminder, also we have a reference fund, which is right now a plus 300%. It did touch plus 1,000% just a couple of months ago, or 1 month ago. But yeah, that's, I mean, it just shows we're using 4x leverage, which is quite a bit. Yeah, you're gonna see 1,000%, and then it's gonna drop down to 300%. But then next time it'll probably go up to 2,000, 3,000% profit. It's just ups and downs. That's how it is. And you know, the reference fund is important, especially for those users that are feeling like they have to put their extra input into it, like tweaking, unplugging, selling by hand, and all that stuff. And then they come up, it's like, why isn't my profit as good as this? Because you thought you were doing better, or you're not. So yeah, but and yeah, I guess another thing I want to show, this is one side that is not normally shown. We don't show in the statistics, but it does have it's important to look at it from the perspective of the performance of the system. So this is a profit curve, which is quite poor because it's from February, and especially Bitcoin market, we weren't doing so well. We mostly did well in the other markets when they weren't behaving as close to Bitcoin. But there's always the Bitcoin perspective, which is the, you know, the alpha, so-called, where from May, yeah, performance was has been quite relatively poor. But if you look at from the perspective of the market, we did quite a bit more than the market. Now it's up 24%, it touched 50%. So this means that basically the system is doing a good job at mitigating the losses that others are normally taking in the market if they're holding Bitcoin or other currencies. And it's mostly, yeah, a reassurance of the fact that we're doing well, even if it not making profit, but we're outperforming the market, which means that when the market is going to pick up again, then it's going to do better than you know, the sum of the losses and the profits. So we're making less losses, so we're going to make more profit in the future, pretty much. So yeah, I went a bit all over the places, but I think I said all that I wanted to say. Yeah, don't freak out, don't worry about it. This is perfectly normal. Thankfully, most of our users, they're seasoned, they've seen this before. So it's always frustrating. It's frustrating for me as well. You know, I wish I could make money every day, but there are always this 1, 2, 3, 4 months where it's just not happening. And it's, you know, in the long term, the potential for profit is still high, performing as expected. But in the short term, just be patient. And if you're free license users, don't make things worse for yourself and for us. And that's about it. You know, see you next time, perhaps when we're back with quite a bit of more profit. Thanks.